they trade 1-to-1 on the NAV, or the net asset value. So each stock that's issued has to maintain a peg to a certain number of XRP. Somebody messaged me the other day and they said, why would I buy a $20 stock when I could buy a $2 XRP? It's the same thing. Well, there's 10 XRP per share of the stock. So every stock that you buy, it's worth 10 underlying XRP. The difference over there on the ETFs is you're going to pay fees to the issuer, and that's how they make money on those structured products. If there are staking or DeFi applications that are applicable over the long term, there may be ETFs that pay a dividend, like the one that was launched here recently. It's a 3% dividend paying ETF. I don't know that you'll ever make dividends in kind. I'd love to be wrong on that, for somebody to be able to pay dividends out of the ETF in kind. Most of the ETFs are not redeemable in kind. All of them are cash at this point. It'd be cool. Again, that'd be another great feature for somebody to launch an ETF that was redeemable in kind for the XRP, but you are going to pay fees. It's through your brokerage account. You're not going to have discretion over that XRP on how you use it or what it's invested in. But it also, you don't have the additional risk of holding it yourself or managing it. You're counting on that counterparty to do it, and that's why you're paying them a fee to do so. But it's always going to trade 1-to-1 with the underlying asset. So if we saw 1,000x on XRP, you would see 1,000x on the ETFs, because they are trading at a 1-to-1 net asset value based on their, ratio of stock per how many shares per XRP is listed in the S1 filing.